article on startupmag.co.uk. It's the top 58 venture capital firms in London. You get a list of London-based venture capital firms plus a guide. You'll see the list here in a minute. Let's get started. So venture capital firms in London are important because they provide crucial funding for startups and early stage companies, often in innovative and high growth industries. They also bring expertise, mentorship, and networks that can help these companies grow and succeed. By supporting these companies, venture capital firms contribute to technological, I can nearly say that, progress, job creation, and economic growth. This resource starts with a list of active venture capital firms in London and continues with an in-depth guide to help you navigate the UK venture capital ecosystem. So first of all, we have the 58 most active venture capital firms in London. You have the names, you have the investor details of websites, LinkedIn and Twitter, the city, obviously it's London, and the country. You also have links to more contact information if you need it. So as you can see, there's 58 there. There's also a link to 342 extra VC funds in the UK. So what is a venture capital firm? In the next sections, you will get to know everything about venture capital firms in London. What is a venture capital firm versus a venture capital fund, firm versus fund, venture capital in London, so a bit of the numbers around the city, an example or a list of examples of venture capital firms in London, and how do venture capital firms get paid. A venture capital firm, VC, is a specialized type of financial institution that invests money in high potential, high risk, early stage companies. The goal is to earn high return on the investments if these companies succeed and grow significantly. Venture capital firms gather their funds from various sources like wealthy individuals, investment banks, endowments, pension funds, insurance companies, and other financial institutions. The amount of money in these funds can vary greatly, ranging from millions to billions of dollars or pounds. Once the VC firm has its funds, it looks for startups or early stage companies that demonstrate significant growth potential. The VC firm might invest anywhere from a few £100,000 to many millions in a single company, often acquiring a significant stake in the company. Let's see a quick example. If a VC firm invests £5 million in a startup for 20% ownership stake, this implies that they value the company at 25 million. That's 5 million at 20%. If the startup does well and its value increases to 100 million, the VC firm's stake is now worth 20 million, earning them a sizable return on their investment. But venture capital is a risky business. Not all investments succeed. Actually, most investments do not succeed. The reality of venture capital investing is that many investments fail to deliver a return, while a small number may succeed dramatically. This is why VC firms usually create a diverse portfolio of investments to manage their risk. Venture capital can be a vital source of funding for startups, allowing them to grow quickly and potentially reach their full potential. On the flip side, VC investment often means giving up some level of control and ownership in the company, as the VC firm usually takes a board on the seat and has a say in some major decisions. What's the difference between a venture capital firm and a venture capital fund? Firm, fund. They're often used interchangeably, but there is a difference. Venture capital firm. This is the management company that manages the investments in various startups and growth stage companies. A venture capital firm is typically made of partners and other investment professionals. They are responsible for sourcing potential investment opportunities, conducting due diligence, making investment decisions, and managing the ongoing relationships with the companies in their portfolio. A venture capital fund. This is the pool of capital that the venture capital firm invests. The funds are usually gathered from a variety of sources, including institutional investors like pension funds, university endowments, insurance companies, and high net worth individuals. A single venture capital firm may manage multiple funds, often referred to as Fund 1, Fund 2, etc., each with its own investment thesis and portfolio of companies. It could also be during time. In summary, you can think of the venture capital firm as the manager and the venture capital fund as the pool of money being managed. Now, London, venture capital in London with a few numbers. Venture capital activity in London is robust, with many startups and growth companies receiving significant funding. The exact numbers can vary from year to year and depending on the specific source of data, but some general trends and figures provide a snapshot of the venture capital landscape in London. Investment volume. London tech firm raise 10.5 billion in venture capital per year. That's $10 billion in pounds, depending on the exchange rate, about 12 billion a year. This represents a 3 times growth in a decade and solidifies London's position as the second most important tech hub globally after San Francisco. Number of deals. The same data shows that the London tech firms were involved in about 1,000 venture capital deals in 2022, more than any other European city. Size of individual investments. Venture capital investments in London are generally quite high. They can range from a few £100,000 pounds in early stage funding to tens or even hundreds of millions of pounds for later stage rounds. Sectors. The sectors attracting the most venture capital in London typically fintech, software and digital health, but there's also significant investment in other areas of technology. Number of venture capital firms. There are hundreds of venture capital firms in London. We have about 300 in our database with about 3,000 contacts. So that's partners, associates and analysts that work in these VC firms, and we call them VCs. VC funds. A single London-based venture capital firm may manage multiple funds, and the size of these funds can range from millions to billions of pounds. Let's have a look at a few examples of venture capital firms in London. There are lots. Here are a few of them, the big ones. You've got AXA. AXA is a leading venture capital firm that focuses on early and growth stage investments. They've backed well-known companies like Facebook, Meta, Slack, and Dropbox. Balderton Capital, one of Europe's leading early-stage venture capital investors. Balderton has backed successful startups like Revolut and the Hut Group. Index Ventures, it's a multiple-stage venture capital firm. Index Ventures has backed companies like Deliveroo, Just Eat, Aiden. Atomico. Atomico invests in technology companies around the world with a focus on Series A and beyond. They have backed companies like Klarna and Graphcore. Passion Capital, this is more early stage venture capital. They've backed companies like Monzo and Go Cardless. Octopus Ventures, this is part of the Octopus Group that have also Octopus in insurance. Octopus Ventures is one of Europe's largest venture capital teams. They've backed Zoopla and Secret Escapes. And BGF, formerly Business Group Growth Fund, is UK's most active investment company, or one of the most active investment companies providing growth capital for London for small and medium-sized enterprises. Final question here: how do venture capital firms get paid? Venture capital firms generally earn income through 2 primary methods: management fees and carried interest. So venture capital management fees, these are annual fees that the firm charges These are annual fees that the firm charges the fund to cover operational costs. Typically, this is a percentage of the fund's total assets under management. Often the management fee is around 2% per year, but this can vary. These fees cover salaries, rent, travel, legal fees, and other operating costs. The management fee is designed to provide a stable income for the firm regardless of the fund's performance. Then they also have carried interest, also known as the carry. This is the VC's firm share of the profits from the fund's investments. Typically, a venture capital firm might receive around 20% of the profits after the return of the original capital to investors, but this can vary. The idea behind carried interest is to incentivize the VC firm to maximize the fund's returns. The larger the profit the fund makes, the more money the firm earns through carried interest. But remember here, if they don't make any money, they still get management fees. So it's kind of a win-win for VCs here. Let's use a bit of an example. If a VC raises a 100 million fund, it might receive around 2 million per year in management fees. That's 2% of 100 million. Then, if the fund eventually generates 300 million from its investments, after returning the original 100 million, the VC firm would receive 40 million in carried interest. That's 20% of the 200 million profit. So, yep, you can make a lot of money if you run a VC firm. A few extra links at the bottom here sending you to other pages. The main big deal here, the guide is cool, but the list is pretty awesome. If you're looking to raise funds, here's the list. If you're looking to sell to venture capital firms or to be recruited by a venture capital firm, it's a very, very useful list. That was it. Top 58 venture capital firms in London.